It is Wednesday, May 7th. It's Fed Day. It's Fed Day. Jerome Powell gets to speak to all you lovely people today at 2 o'clock. We get the decision, and at 2:30 we get the press conference. So your markets are soaring now. We'll go over why. Trump teased the market. We'll go over the strategy for that. The VIX, we'll go over that. We'll go over my HIMSS play. I was up 20%. I think I'm still up 20%. Don't exactly know. We'll go over what I'm doing with that Palantir double top. And then earnings, AMD, SMCI, Disney, Novo Nordisk, Uber, and tonight's earnings. Then I think I'm going to do a little bit more for you guys. There's an education. I saw a thing about moving averages. So I'm going to give you a free education on moving average. Then, for the paid subscribers of the newsletter, if you get the paid newsletter, again, it's dailystockpick.substack.com. You can pay for it. I'm going to do a bonus podcast today of 6 easy steps to master your trading and investing process. It's based on a newsletter that I read that you guys can all read. I'll provide that one for free if you just want to go and read the newsletter. But again, 6 steps. Let me just start this by saying I am a lawn geek. So fellow lawn geeks, again, suburban man, humble brag. Those are my legs. Those are my shoes. That's my lawn. Okay, you can see this on Substack. I pointed it out yesterday. It does look like a golf fairway. It's not a golf green. It's a golf fairway. So there's a big difference. And all you like specific lawn junkies who are lawns, you will see there are weeds in there. There are a few weeds in there. It is spring weeds. They will be gone by summer. So I just didn't put down enough pre-emergent, by the way. But it's super thick. It's like a carpet. It's nice. That's my backyard. I am a lawn geek. It has taken me. It's funny because I was talking to my the manager of MLS, my MLS job, and I'm like, for the first time in 2 years, I haven't traveled in the spring to a damn MLS game, so I had time to do my lawn. So I'm pretty happy with that. Now let's talk about the markets. In pre-market, we are up, by the way. There's a ton of green in pre-market. QQQ is up 0.36. You've got Disney up 7%. You got a lot of movement in this. I do want to update everyone. The Liberation Day strategy that I have that back performs phenomenally still hasn't gotten you in. May get you in, but remember, this is a weekly candle. So it might be next week that this gets you in. So understand that that is just a possibility, and why you should have TRENDSPIDER is because you want to get an alert when the Liberation Day strategy says, hey, you want to be part of the 64% of the time that you win? Do you want to make 300% over the last 9 years where buy and hold got you 322%? And knowing when to buy, the more key point is if it does signal a buy, when does it get you out? Because you can see during this time period in 2022, we back tested this during this time, and it saves you about 25%, but it does get you in and gets you a couple of 5% losses. Okay. But then you get the 27% gain, then you get 75% gain, then you get the 10%. And even in 2024, during that summer where you had the Japan crash, it had a couple of losses in there. But overall, again, it back tests super, super well. 25% savings during COVID, 32% savings during the 2022 historic rate increase. Dot bomb, it saved you 2008, 2009 financial crisis. And so far, it saved you 25% from top to bottom in the Liberation Day strategy. I wrote this after Liberation Day, so I back tested it, but it saved you from top to bottom there. It got you out with an 8% gain, so you would have saved. That's what TRENDSPIDER can do for you. It's a tool. How do you get TRENDSPIDER? You go over here to my link tree, LINK. The link is literally down in front of my head, linktr.ee/dailystockpick. It's the top link. And you'll get over here. You can try this for as little as $19. Okay, you can save up to 32%. But you go ahead and try it for 2 weeks. Sign up for an annual plan. I'll send you every tool, every strategy, every watch list, and every scanner that I've created. Okay, that includes the 4-hour algorithm as we go through this. So let's look at the markets. Stock index futures advance on U.S. China talk optimism, focus on Fed's rate decision. You can see the Dow is up 0.49, the NASDAQ whatever it is. The S&P is up 0.37. It's up. The Fed meeting announcement today, they met yesterday. You'll get a 2 p.m. announcement, and they'll get a 2:30 p.m. Jerome Powell press conference. The press conference is what typically moves the markets. But we always talk about unexpected catalysts. 95% chance based on poly markets that the Fed does nothing, doesn't move the interest rates. But we always talk about those unexpected catalysts. What if the Fed decides to listen to Trump and actually cut rates? I am 90% certain that they are not going to cut rates. Jerome Powell is not going to bow to pressure and cut rates just because Trump said it. They need some data, and I don't think that they have the data. But that 10% in me, the 5% in the market, but the 10% in me says, what if they do? I think the market actually starts to fly, unless the market signals that as, oh shit, the Fed sees something that we don't see, and we're going to sell off. We talked about the S&P targets. If you want to look at the targets, let's just go to the 4-hour, and we can see that QQQ has you in since 458. We're at 483 right now. But the S&P targets are around 56 to 5,800. You're at 558. Okay, SPY trades at 10 time move the decimal point 1. So when they say the S&P is at 5,580, that means that again, SPY is at 558. So 5,600 on the S&P, that would mean 560. Not a huge upside. But just in case, I want to stay in the market because you've got two things that were announced. You've got the Fed, which is going to announce, and you've got senior officials from the US and China are set to meet in Switzerland on Saturday. Both of them have confirmed they are talking. So unlike the last couple of weeks where Trump said, yeah, we're in talks with China. We've had open talks with them. And China said, no, they haven't. China was telling the truth. China was absolutely telling the truth. It was Trump that was doing it. And Trump, in fact, he is playing games with the market. Understand that. He teased yesterday during a press conference a very, very big announcement. What's the strategy that I said have 2 weeks ago or 3 weeks ago during that where he said he tweeted out it's a good day to buy the market? Have your alerts set up on Truth Social. I don't go on Truth Social. I have it set up on Twitter. Okay, they typically do it in both places. The Truth Social is usually first, Twitter second. I don't need to be absolutely first in the market. I just don't want to sign up for another freaking social media account. I hate it. I can't stand it. So I did it on Twitter. But again, he teased an announcement. He said it might not have to do with trade, but he said it's coming either this week or Monday. He didn't provide any more details. Again, he's playing with the markets. It is all about teasing and making sure that the markets don't crash. And that's Trump. I mean, he absolutely is playing with the markets. So just have your strategies ready. The VIX, the 50% decline in the VIX over the last 4 weeks is the biggest, second biggest volatility crash in history. In history. Okay, there's the historical. This is from Steve Burns. We can go over here to Seeking Alpha and we can type in the VIX and we can look at this. The VIX is now down 0.8. 24 is about where it should be right now. If you get under 20, we're in a bull market. If you get under 20, we're in a bull market. This one spiked here April 7th. It spiked here up to 48, 52. Remember, in September of last year, August, it got up to 38. I think it got up to 60, if I'm not mistaken. But again, it's the biggest, second biggest in history. And that just means that we're recovering faster, okay? It doesn't mean that we're out of this thing. We're still in a market where a tweet or a trade decision or hey, we're not negotiating with these folks. Or it's going to take 2 years to get to this and we're going to implement tariffs. We're still in that market where that can take you down 10%. So just be aware of it. Doesn't mean pull out. It means make sure you understand every stock that's in your portfolio, its risk, And where it goes, we'll talk about it later. The average person spends 6 minutes researching a stock before buying it. I think it's the median time. That's crazy. Okay? You don't understand all the risks within 6 minutes. I don't care if you do have Seeking Alpha and you can look at it completely. You don't understand that, but you should know an overall risk. Like Apple, you should know they're in China. China may retaliate against the US by using Apple. Hey, you know all the Huawei phones? Yeah, they may actually subsidize them versus an Apple iPhone. Maybe, not out of the realm of possibility. So you have to know where you're invested in and what the risks are. Paul Tudor Jones, a risk. AI poses an imminent security threat to humanity. I think it's a 10% chance in the next 2 decades that AI will kill half of humanity. Scares the fuck out of you. But you know what? I said this with CrowdStrike. When they dipped down to about $200 and I said, hey, you want to buy this stock? I don't care if it can go to 100. They shut down the world. If AI has a 10% chance of actually killing off humanity in the next 2 decades, my ass during the next 2 decades is investing in AI. And they give you some AI, some exchange traded funds linked to AI robotics. Okay, I like it. I like it. Now read this article because it's, Paul Tudor Jones says he was in a private meeting with the 4 of the 5 top AI guys. And they all kind of said, yeah, hey, there's no controls on this. So, HIMS. You guys know I bought HIMS because based on a strategy of a potential short squeeze. Well, it was trading at 39 while I was doing the podcast yesterday. I bought at 41. We got up to 50. And I thought, okay, I'm going to sell at 50. That's what I thought I was going to do, that I was going to sell at 50. I wasn't going to be greedy. Didn't sell at 50. I'm still holding it. Why? I think it might do the same thing as it did yesterday. If we just look at a 5-minute chart and we go into this, and we look at yesterday, look at how it went down during the pre-market yesterday and then shot back up. I would say that was partly due to a short squeeze. Okay. Remember, HIMS has a 28% short interest. When you go over here and you can just look in Seeking Alpha, 28.15% short interest. That's a big short interest. And when I look at this chart, I say maybe the shorts haven't all gotten out, and that's what causes this to spike. So I'm looking at maybe getting out at 50. If we hit 50 today and I see some type of resistance, I didn't see resistance yesterday. I saw all support going up. Okay. And then after hours, it pulled back. That could be similar to what we saw yesterday in the pre-market. So that's my plan on HIMS. I do think that we're in a short squeeze. So, don't listen to me. Don't listen to a douche on the internet. Palantir chart showing classic double top. BTIG. This is other momentum stocks could face longer than usual May after recent gains, according to BTIG chief market technician Jonathan Krinsky. I like this guy. One of the highest profile names at the intersection of retail and momentum is Palantir. It appears to be sporting a classic double top. If you don't know what a double top is, go and check it out on Investopedia. If you're a boomer, Investopedia is your thing. If you're, Gen Z or Gen X or what, maybe AI, just go and ask Perplexity what it is, okay? But Palantir, double top. And we can look at it right here. Do you see a double top? Boy, let's put in that line right there. We have one line at about 80, and we have the double top right there at about 120. Boy, that looks like a good trading range to go in. And you're trading at 108 right now. If you can get Palantir under 100, I don't think it's a horrible buy. Or you can trade it in the 4-hour algorithm. Okay? The 4-hour algorithm, it doesn't beat buy and hold. It's about half of what it is. But with a stock that's this volatile, and you win 52% of the time with your average win being 24.49, yes, you're still in this from this $88 range. It's not going to time the top and the bottom. But out of 24 months, okay, the last 24 months, there are 23 positions. You win 52% of the time. That's 12 and you lose 11. And your average win is 24%. Your average loss is 4.35%. And they've had their earnings. So if they start to come back down towards that 100, my opportunity is to buy. And if they get down to 80, where I think that provides a support level, I think I'm going to buy. If you want to read this article about the double top and what their targets are, you can absolutely read it on Seeking Alpha. So there's your earnings from the past week or so. Let's talk about yesterday's earnings. AMD did really well and gave great guidance. It's under 100. It's trading at 99.80. Now, AMD is not, I have bought this one under 100 before, but things changed with AMD. When NVIDIA really started to get out ahead of AMD and AMD said, hey, we've got, AI leading product, and they really didn't, but they've changed a little bit. Okay. Their earnings show that they're still a viable company, but it's expensive. Okay. You're trading at 22 times forward earnings. With the growth, the PEG ratio is absolutely, it's fine. I mean, 0.80 going forward, that's fine. And it's because their growth of 13% revenue growth year over year as a large company, that's pretty damn good. But, and I always say this, the momentum is what's hard. Okay, this is probably the most important thing. Now you see a B plus on there, even though it's down 10% in the last 3 months. It's because the sector of semiconductors, information technology, is down 17% in the last 3 months. And that's why it gets a B plus. It's worse than the sector in the 6 month, 9 month, and 1 year. That's why you're seeing a D. That's why momentum sucks. Okay, remember, the quant is just a score of a stock's performance in valuation, in growth, profitability, momentum, and revisions. It gives you grades. And so while I think they did really well and it's under 100 at 99.82, I don't trust this long-term trend. We've talked about this before, that red line. I've done this all the way since March of 2024. I said that downtrend that we see, I don't like it. I want it to break it. Is it low enough now? Maybe. I mean, if you just go to AMD and you look at some of these people who are just updating this as of yesterday's earnings, buy, strong buy, strong buy. This one on Friday said it was a hold. That was even before the earnings. So I may be not, the smartest guy when it comes to chips. I own NVIDIA. I want to own Broadcom, and I own Credo as part of Seeking Alpha stuff. If you want Seeking Alpha, if you want to analyze with AI, you can look at this. This was just the last virtual analyst report was done on 5/1. So they're going to update it today, probably today. After their earnings. Again, they announced earnings, so the virtual analyst report will probably run on the earnings and stuff like that. AMD is perceived as undervalued with a strong earnings record and robust AI tailwinds. The company's data center business, which did really well in this last earnings, contributes 49%. I'm not selling this one because the concerns, I believe there are more concerns than there are positives. AMD continues to lag behind NVIDIA in the AI race. That's all I need to know. So for me, AMD, if I'm going to actually buy it, it's going to be a trade for me. It's not going to be a buy and hold. NVIDIA, buy and hold for me. But for me, AMD would be a trade, and I need to find out if this downward trend is done. And once that's done and we start to see an upward trend, maybe I'll think about trading it. That's how you do it. Now, SMCI. Let's just talk about SMCI because this is... I don't trust SMCI. Ever since I got out of this one, I just don't trust them. They missed and guided lower. So they did a pre-announcement of their earnings and they still are down 6% even after, totally telling you last April 29th that hey, our earnings suck. And they're even down further. Okay, it was a shit show. I still don't trust the company. I'd rather buy VRT, which is a cooling platform, which again, it's not in direct competition with SMCI, but I'd rather buy this one or I'd rather just buy Dell, one or the other. I don't own any of them, but I think Dell, not a bad. I mean, that one slid 27% over 1 year. You can see 52-week range between 66 and 179. You're trading at $93. I think AI continues on, but I don't like SMCI. Now, Disney's a $120 stock. It's up 8% in pre-market because of their earnings. It's up over 100. Okay, it's up 9.57% right now. Disney absolutely killed it. And I've told everybody this before. When you buy Disney at 80 or 90, expect it to go to 120. And as you get into closer to 120, just sell it. Yes, it's expensive. We can go look at Disney here. Say you want to trade earning. The valuation is crazy. You're paying 16 times forward earnings where the sector is only 12. The PEG ratio is 1.29 where the sector is 1.22. And potentially you're in a recession where consumers aren't going to be spending. Not great. But again, Disney, their earnings per share beats by 24%. Revenue beats by $470 million. Direct-to-consumer operating income increased $289 million. 180 million Disney Plus and Hulu subscriptions, an increase of 2.5 million versus Q1 2025. Okay? 126 million Disney Plus subscribers, an increase of 1.4 million. Linear networks operating income grew 2% year over year. And their guidance, all good. All good. So does this tell you, okay, I need to buy this one? Well, again, we've seen this downturn. And are we in this downtrend? You know, right now at 100, you're right just above this trend line. It's not using this as support. It's definitely using this as a resistance level. You can see. So if you're going to buy at 102, 103, expect it to go to 120. You know, if you're going to buy at 98 and 99, expect it to go to 100. This is a trade. Now you can trade it in the 4-hour algorithm because the 4-hour algorithm over 24 months makes you 16%. You lose 7% if you just bought and held. It's not my thing, but again, you can enhance that strategy to try and trade Disney in TrendSpider if you'd like. Now, regarding my HIMS thing, you know, HIMS is in a partnership with Novo Nordisk. Novo Nordisk released their earnings. Okay, they cut the 2025 outlook. They projected a sales recovery for Wegovy in the months ahead. That's what's making it rise. And does NVO, you can see, we talked about a downturn. Does this one have an upturn back to highs in it? Well, maybe. 4-hour algorithm had you in here at, let's say, about $60. You're at 66. In pre-market, you're at 69. Up about 5%. Is this the time where it's turning around? I would much rather see a turnaround on the weekly before I start trading it. Okay, maybe that 9-day to turn positive. I'd rather see that. You can see how low that MACD is. You can see how low that RSI is. But when you look at Novo Nordisk, it's still expensive. The valuation is still expensive. And while they're projecting a future growth in Wegovy, that may not happen. You know, the revisions have all been down. The momentum sucks. The momentum, you're down 23% in 3 months. The sector's down 20%. It's in healthcare and it's the pharmaceuticals. Want to know something that's better? You know, you can do Verona Pharmaceutical, VRNA. This is a top quant stock that's a strong buy. It's up 50% year to date. Whereas Novo Nordisk is down. So I think, again, if you want Seeking Alpha and you want to get it, go to my link tree right here. You can get the bundle. The bundle's great. It gives you the alpha picks and it gives you premium. But while the sale is going on, you can get a 7-day free trial of Seeking Alpha Premium, which can find you those stocks that may be going up versus the stocks that are going down. And you get $30 off a free 7-day trial, and you get the next alpha pick, which is 8 days away. So wait a couple of days, sign up for the Seeking Alpha Premium, see if you like it, And then you'll get the free alpha pick, and then you can cancel within your 7-day free trial. Simple as that. But again, that's how you use Seeking Alpha. The average person spends 6 minutes before buying a stock. I can tell you, I spend at least 10. Not much more than that, but I have the tools to be able to do that between Seeking Alpha and TrendSpider. Now, a stock that I love, freaking Uber. I love that. It's a $100 stock. They missed on revenue, but pushed their guidance up. It's a $100 stock with the growth was phenomenal. And the quant says it's a strong buy. The only thing is the valuation, and that's a little bit extended, not tons extended, just a little bit, because the PEG ratio with their growth is still good. 17% revenue growth year over year, levered free cash flow of 102%, where the average sector is 4.45. Uber is a buy. Find a strategy that you want to get into it. Okay, I would say anything under 80, you get into it. I've talked about between 70 and 82, 60 and 80. Those are all areas of interest where you've seen this one pump up to 80 and then pull back. Now, what would I do when they up their guidance and you're trading at 82? I'd probably take some off the table. The reason is because ever since March of 2024, just over a year ago, you've pumped up to 80 3 different times and pulled back to 60s, sometimes to 70. So there is an absolute strategy to trading this one. I own it, but I absolutely get in and out with some trims. I trim it every now and then because until we get out of this space, I want to trim. So I do that just between 60 and 80. That's my strategy. So let's talk about, first off, we're going to talk about tonight's earnings. There's a couple of interesting ones. ARM, AppLovin is interesting. This one, higher expectations. Meanwhile, the stock has been down. So year to date, it's down. Let's say it's down. Oh, this one doesn't give it to me. Year to date, we can look at AppLovin. It is an alpha pick. It is a top stock. It is a quant as a hold. And the reason is the valuation. The valuation is still extended. They need growth in order to bring that PEG ratio down. It's 43%. And with them expecting a higher expectation, I don't know what I think about this one. Again, I just don't know what I think about it. One that I do know that I like is MELI. Okay, MELI is expected $8.27. They reported $12.61 last time. Lowered expectations. MELI is one that I really like. MELI is one, just full disclosure, it is the one that, $5,000 can turn into $1 million. So I like this one. I like this one a lot. 1960 was the buy. Did you get in? If you're a paid subscriber on the daily newsletter, maybe you did get in. Maybe you did because I had mentioned that Mercado Libre could turn it. So it's an interesting one. Again, I like that one. IONQ, which is quantum computing, one of the leaders in quantum computing, at less than previous loss. 93 cents was the reported last time. This time, expected to 14 cents. So I think that one's interesting. Carvana, I won't ever get into Carvana. It's just crazy trading, but I mean, they've been able to pump this stock. Carvana is a crazy, crazy stock. The valuation makes no sense to me whatsoever. But the 4-hour algorithm makes you 3,681% over the last two years. Again, I will say that 3,681% over the last 2 years. If you bought and held, you're still doing well, 3,384%. Choose your fighter. Is it buy and hold, or is it trading on a technical strategy like this? Because over 2 years, it has shown that it has worked really, really well, including 90% gains, including 54% gains, including 20% gain, 70% gain, 12% gain. And you're in it at 203 and you're trading at 258. That's just over 20% gain that you're sitting in right now. Your average win is 90%. So when it tells you to buy, maybe you want to buy. But I will say, Fundamentally, I don't trust this company fundamentally. The valuation, 76 times forward earnings. I just don't trust it. I don't trust it. Your PEG ratio is 1.45. Not horrible. It's number 2 out of 22 in automotive retail. Number 1 is SAH. I mean, maybe that's something that you want to invest in there. Year to date, let's see, this one's down 0.84. And again, that's just based on quant rating. Maybe you want to look at that. Fortinet is reporting tonight, which is a cybersecurity one. 53 cents versus 74 cents actually reported. Again, lowered expectations. And who's cutting back on cybersecurity? Now, I sold this at 70. I sold a bunch at 70 because it was showing resistance. Have I gotten back in? No. But I will tell you, 81 looks like a support level. The old resistance will turn into support. And where'd that 81 come from? It came from a previous all-time high where it pulled back. I mean, very simple, very easy to look at on these charts. The MACD, a little bit high. The RSI at 64, doesn't matter on earnings. Earnings will drive this stock up or down just based on results. Then you got AXON, AXON. This is if you ever watch body camera footage from cops, this is them. This is them. It's incredibly expensive. Again, you're paying for this growth. But, over time, the 4-hour algorithm over 24 months, 26 positions, 96%. Buying and holding has made you 178%. Again, it's expensive. AXON. If we go and look, the valuation is crazy. 102, 103 times forward earnings. The PEG ratio is 1.18. It's not crazy. It's not crazy going forward, though. 4.91. Their growth is fantastic, 33%. And by the way, don't trust me. Go and analyze it with AI. Their competitors, Motorola, L3 Harris, and AeroVironment. Okay, the valuation is challenging with metrics such as price to sales at 23, far exceeding the sector median of 1. Growth demonstrates strong growth with an impressive revenue growth of 33% year over year, outpacing the sector at 4%. The revisions, C+, are mixed. There have been 11 downward earnings per share and 3 upward, while revenue revisions show a positive trend with 15 revisions and none downward, indicating optimism about the future revenue. Might be an interesting play. This is one of Shai Bulor's favorites. So, again, you've got a ton of earnings. Earnings Hub has it right here, and you can look at it. Axon, they're expected $1.24. Last time they reported $2.08. So if they come in above that and they start raising expectations, maybe that's a good one. Maybe that's a good one. You got Shopify before the market opens tomorrow. This one at $93, I think it's $120 stock. It's just the valuation. That's it. But Shopify on the 4-hour algorithm, it makes you 54%. Buying and holding makes you 99%. You win 50% of the time. 12 times you win, 12 times you lose over the last 24 months in the 4-hour algorithm. Enhance the 4-hour algorithm, maybe you'll get a better style of trading. Again, the algorithm is more about making sure that you understand the actual formula versus everything. I'll have more of earnings stuff in the newsletter if you want. But I want to move on to an education portion because this is everything you need to know about moving averages and indicators. AI can provide you a custom course in this. I saw this. Okay, moving average roadmap. 5-day EMA, I don't use it. 10-day EMA, I don't use it. 20-day EMA, I don't use it. 50-day SMA, I use it. 100-day SMA, don't use it. 200-day SMA, I use it. 250-day SMA, I don't use it. Okay? Understand that these are different for everybody. What do I use on my charts? Well, just go to VOO, okay? And I'll show you exactly what I use on my charts. I use a 9-day EMA, which is that green line. I use a 21-day EMA which is the yellow line right there. I use a 50-day SMA right there, and I use a 200-day SMA, okay? That's what I use. I have found this to be incredibly helpful. If you'd like to know why I use these, you can just go over here to the newsletter, go to the education section, and I have it in one of these education newsletters. Why I use those. Let's see. Which one is it? I know it was one of the first ones that I typed up. PE, blah, blah, blah. It might not. Just you can Google or you can just search moving averages and it'll show you exactly which ones I use. But that's what I use. Now, when I saw this, I said, the 5-day, makes sense. Not really. 10-day, I don't like it. 20-day, I like 21. Between the 10 and the 5, I like the 9. 50-day, I don't use 100. I just don't. And 250 just never made sense to me. But again, you have to get used to that. So I went over to Perplexity and I said, what moving averages, SMA or EMA, should be on a stock chart? Assume I have some knowledge of moving averages, but very little. I know something about candlesticks, but not very much. Are there other indicators you would suggest that I learn? Again, set yourself up by learning technical trading with an AI. You can even speak this and have a conversation with Perplexity about technical indicators and say, oh, I didn't understand that. Can you explain that more? Sure, it will. But they're suggesting for stock charts, most common moving averages are SMA. Common periods are 20, 50, and 200. The 50 and 200 are especially popular for identifying long-term trends and support resistance level. Absolutely. The EMA gives more weight to recent prices, making it more responsive to current price changes. 9-day, 21, 50, and 200. The 21 EMA, which I use, is often used for swing trading, while the 50 and 200 EMAs are used for long-term trend analysis. Again, I mix the two. Why to choose EMA? They react faster. Why to choose SMA? They're slower, but provide a smoother view of overall trend. Many traders use both. For example, a 21-day EMA for a short-term momentum and a 50-day or 200-day SMA for long-term trend direction. It's explaining it like I do. Okay, maybe even better. But other indicators to learn. If you notice on my chart here in TRENDSPIDER, there's a MACD and there's an RSI. What did Perplexity say? Well, RSI and then MACD. Oh, and by the way, these shaded areas that you see right here in blue, that's Bollinger Bands. And then VWAP. TRENDSPIDER has VWAP. I don't use it. But it absolutely is a game changer. And so I'll put this all in the newsletter so you can read it. This is everything that you need to know and continue the conversation with Perplexity about what questions you have. There is your free course on technical trading. It is 100% no cost to you. And don't come at me and say, well, what's this? Go and ask AI. You have tools that I never had when I had to learn this stuff. There are tools out there. I talk about this all the time. I had to pay $50 commission on each trade when I first started trading. That will make you identify a good trade. When you have to know that you're going to pay $50 per trade, you will know whether a trade is good or not. But this is 100% your own course. Okay? Now, this was a great newsletter by Ben Carlson. I am a fan of Ben. He is the one of the hosts of the Animal Spirits podcast. The Wall Street Journal highlighted a new study showing that the median investor spends just 6 minutes researching a stock before buying it. Now, if you have the tools, if you have Seeking Alpha, because Seeking Alpha, I could spend literally 3 minutes going over analyze with AI, the valuation, growth, profitability, momentum, and revisions, and then look at some of their competitors. I can spend 2 to 3 minutes and probably know if I want to invest in it. That's it. So I don't necessarily agree with Ben that that's the reason of the drop, because it's no wonder the average holding period for his stock has dropped from roughly 8 to 10 years back in the 1950s to just a few months today. I think there's a lot of people who think they can time the market today based on the tools that you have. You can't. Okay, this is an entire article on Warren Buffett and why he has shown you buy and hold works way better than trying to trade in and out. And Ben, he even says, he knew early on. I learned early on in my investing career that I would never be a stock picker like Buffett, but I immediately latched onto his views on investing for the long term. Again, this is a great article. So what am I going to do? I put together 6 easy steps to master your trading and investing process. And I'm going to do it as a newsletter today, a bonus podcast. So it will be for paid subscribers, but this one is an absolute read. Take 3 minutes, read this one. Okay, if you've gotten scared and you pulled out of the market completely, or if you even pulled the majority of your VOO or QQQ out before when Liberation Day was announced, and you think you can time it like that every time, read this article, because Warren Buffett is proof that yes, buying and holding works way better than trading in and out of something. So if you have any questions, hit me up. I'm on Linktree. My email address is up here. You can also reply. If you sign up for the newsletter, you can reply, you can comment. There is a chat for the newsletter. So if you're a paid subscriber, you can always chat with me. I think even free folks can chat with me. But point is, it's wide open. I mean, my DMs are there. You can, get to me on Twitter if you'd like as well, or even the Facebook group. It's all on Linktree. Everything that you need to do is up here, including, by the way, my Webull. Let's do a check on Webull, because I put $1,000 into Webull a few years ago, and it has grown substantially. I trade in this like it's a sports betting program, and I'm at $10,890 right now. So the entire portfolio is Apple, Google, iBit, Nvidia, Spotify, and Tesla. I trade out of triple leveraged ETFs every now and then. It is a super, super risky portfolio. I like it because, again, I'm not 25, but with $1,000 in the bank, I could be 25. And that's why I like it, because I would never trade my large portfolio like this at all. Not one bit would I trade my large portfolio like this. So if you have any questions, hit me up. But you can sign up for Webull right here on the Linktree. Get some free stocks, because you can get 3 or 20 free shares when you just put some money in there. So have it like a sports bet. Again, if you're a sports bettor, if you're losing money in some other fashion, maybe just try and go YOLO with $1,000. Again, I for me, $1,000 isn't going to change my life, but even if it went to zero, but I grew it to $10,000 or almost $11,000. So I've done well. If you have any questions, hit me up. I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss